This is VIP Industries, which has been registering smart gains, and this is after gaining about as much as 60 to 66 to 67% over the last 3 months. This comes at a time when the domestic market share has been witnessing a slight uptick, and we're also seeing looking at a little bit of recovery. To discuss this further in detail, we're in conversation with the chairman of VIP Industries, Dilip Piramal. Thank you for joining us, Mr. Piramal. Well, my first question will have to do with the kind of growth that you've seen in this previous quarter gone by. There has been an uptick, but if you could take us through the factors that you attribute to this growth.
Well, I'm happy to say that all our segments are doing well. And in fact, we have 5 brands in the luggage space. That is Carlton in the topmost segment, followed by VIP and Skybags, and then Aristocrat and Alpha. And all these 5 brands are doing well. And our product portfolio is extremely good. I think it's the best range we have ever had. Our ladies handbags brand, Caprese, also is doing quite well. There is good growth, though the base is quite small. And on the trade channel, on the distribution channel point of view also, except for CSD, which has been a problem area for the last 18 months, and that is so with all the companies. It's not only something specific to us, but all the luggage companies and as well as all the other industries also, there has been a disruption in the Canteen stores department sales because of their own new policies. So that is the only sort of weak point in the entire spectrum. And otherwise our sales have been good all around.
So, Mr. Piramal, the festive season began with some amount of weakness, but the latter half of the festive season picked up substantially. To what extent has this season played out when it comes to the numbers for this particular quarter in terms of growth?
Yes, I think the festive season has played a significant role in this quarter because this year the Diwali was very early. It was on 13th of October. So that has also definitely impacted our September sales. Our October sales have been good. Now we have to see how November and December pan out, because definitely there has been some advancement of the sales. But if November and December also are good, then we're going great. But there might be, the growth in this quarter might not be as high as in the previous quarter.
Also, Mr. Piramal, if we were to split Caprese and Carlton from Aristocrat, which is a more of a value brand, but it's also faced a lot more competition, how would you say each of these segments have performed? And also perhaps an outlook in terms of the expectation of demand that you see for each of these segments?
As I said, all our brands are doing quite well in their own segment. So, in fact, there is nothing significantly different in any particular brand which I can comment upon. And Aristocrat we have now been promoting Aristocrat in the last 1 year. So, the growth is slightly higher there, I think.
Mr. Piramal, also your international business has seen some amount of weakness. What is the contribution to the overall revenues? And if you could tell us a little more about what's going on in your international markets?
Our international business is quite weak. It was never a large part of our sales. It was about 9%, and now I think it's down to about 7%. Because our main markets were the European markets and the UAE. Now the European markets have been sliding down for the last 6 years because of the downturn in the economy there. And we are not a leading brand there, so in any downturn, it is the weaker brands which suffer more. And we had bought Carlton, which is our main selling product there, in a bankruptcy in 2004. So obviously it was a bankrupt company, so it was very weak. And so Europe has been extremely slow, but we are quite strong in the United Arab Emirates. But there also the economy is on a downturn because of the falling oil prices, and employment also has gone down. So both these markets have been adversely affected.
And a word on your online sales?
Oh yes, definitely. In fact, online sales are increasing quite rapidly, and this is one segment which will definitely grow considerably in the coming days.
Also, Mr. Piramal, coming down to your channels, your Canteen Sales has seen some sluggishness of late. Can you give us a little more about the outlook when it comes to this particular area?
Well, now it's been there for about 18 months, so the base also has become small, and I also feel that because the canteen sales have been slow, there has been some diversion in the regular trade market. So overall, our trade sales are quite good.
And finally, Mr. Piramal, what we've also seen is that because of the fact that there's been an increase in crude prices, and I know that your raw materials are quite low, but you have a substantial amount of purchases which are directly linked to crude. We've seen a little bit of an uptick. Have you also started witnessing a little bit of an up move when it comes to your input costs as a whole, because of which could have an impact on your gross margins?
Well, it hasn't translated as yet, means in our sales up to September, and it won't happen in this quarter, current quarter also. Also because we import quite a lot of our goods, and the rupee had appreciated in the last 1 year. It was 68 rupees a dollar, and now it is sort of hovering between 64 and 65. So we have got that slight advantage there. But our purchases for the next year are, which we have already now concluded, are at a higher price, and definitely Chinese costs are growing quite steeply. So that impact will come. That impact will come next year.
I did want to get an outlook on your margins. And if you could just take us through the expansion, whether or not you can expect that in the second half.
No, I don't think there will be any expansion, but we hope to maintain them.
Okay, thank you, Mr. Piramal, for taking us through the outlook as well as the earnings.